All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world, and happy Thursday, everybody. Today's October 3rd, 2024. And I can't believe we're talking about this. I can't believe we're back to this stupid 2020s thing. One of the great prophets of our time, the late George Carlin, once said, consider how stupid the average person is. And then remember, half of them are even dumber than that. All right. And I think this is appropriate because we are once again talking about panic buying toilet paper. I cannot believe we're having this conversation right now, but the stories are out there this morning and it's kind of a slow news day. So let's talk about this, guys. There's videos on X, people loading up their shopping carts. And I'm not talking about like the regular gigantic shopping carts at Costco. I'm talking about the big flatbed noisy things piling up toilet paper and paper towels once again. Now, guys, let's think about this, all right? Because the reason they're doing this is the dock worker strike, the longshoreman strike, all right? And look, eventually the longshoreman strike, if it goes on long enough, will cause shortages of things. Probably things like perishable fruit is what's realistically going to be in short supply if, and that's a big if, this strike were to carry on for several weeks. But now imagine you're shopping, right? We've all done our food shopping at some point. Do you go straight to the aisle with the toilet paper and the paper towels, or is that like the last thing you put in your cart? For me, it's the last thing I put in the cart because it takes up so much freaking room in the cart that there's no room for anything else. The more important things that you went to the store for. So really what you do is you grab that giant thing of paper towels or TP on your way out of the store because it's a pain in the butt to handle. Now imagine a ship, a boat. Guys, we don't import toilet paper. It takes up too much freaking room. The cost to move a 40-foot container across the Pacific Ocean is more than a 40-foot container full of toilet paper is worth. This strike is not going to affect toilet paper supplies. It's not going to affect paper towel supplies. Stop panic buying this shit. You're going to cause the shortage you're afraid of. This is so stupid. I don't know where this came from. Modern psychologists will study this for decades. And, millions of years from now or thousands of years from now, Indiana Jones or whatever whatever we call him back then, the archaeologists will dig up fossilized remains of us and they'll find these hieroglyphs of people fighting over toilet paper. And I'm going to make another Mad Max reboot, except this time the survivors of the nuclear holocaust fight over the last few remaining toilet paper rolls in civilization. And Lord Humongous of the Wasteland is out on the PA saying, just walk away. Just give us the toilet paper and walk away. And this is so stupid. Why are we talking about this? Stop doing that, guys. The toilet paper supply is fine. Also going on this morning, I saw two different articles this morning, one in Barron's, one, and I think it was Market Watch was the other, or maybe it was Wall Street Journal. But a lot of people are talking about the dollar debasement trade. They're talking about the run-up in gold. They're talking about the run-up in silver. They're talking about the run-up in Bitcoin this year. Why are these things happening? And actually, believe it or not, Bitcoin and gold are both outperforming even AI stocks this year, or at least keeping pace with the moves in the S&P 500. They are doing fantastic. So is this just an everything bull market, or is this an everybody out of the dollar kind of scenario? When everything is rising in unison, that's not the value of things going up. That's the value of the denominator going down. And they're finally starting to catch on with it. And the culprit in both articles is reckless government spending, is debasement of the debt, is artificially low interest rates, which, by the way, all central banks in the world are now pivoting dovish. Even Japan is at least walking back their hawkish rhetoric. We talked about that yesterday. And of course, gold is ripping higher on the news. It's not up today, but if you look at a chart of this year, gold is doing phenomenally well. And even just yesterday, Costco, again, we're talking about this one, Costco is now selling platinum bars. All right, stop and think about that for a second. That is this shift in the mentality of the average person, besides panic buying toilet paper, that is. People at retail locations are now buying bullion And it's gone from not just gold, not just silver, now platinum available at Costco. Think about what that represents as the sentiment shifts, as even the average person is now starting to catch on at what unbelievably selfish imbeciles our leaders are and how irresponsible they are and how they have already bled the next 2 generations dry of everything they're ever going to earn. And now they're working on a third. Also going on this morning, OpenAI announced a major cash raise yesterday. Sam Altman's AI company, the owner of ChatGPT, they raised $6.6 billion at a $157 billion valuation. Not bad for a charity gig, huh? $157 billion valuation. Remember, guys, OpenAI is a charity. It's a 501c, whatever, nonprofit. And yeah, $157 billion valuation. Also, keep in mind the articles from not too long ago. OpenAI was on pace to go bankrupt this year if they didn't raise that capital. All the participation or those participating in the capital round included NVIDIA, included SoftBank, Microsoft, a lot of the usual players. Sam Altman is out there asking for exclusivity, saying, please only back my company and don't also back Anthropic. So the AI mania, that one is still going on. We got some labor data today. Again, the big labor data comes tomorrow morning with that jobs report. That's going to be a market mover one way or another. But we got challenger job cuts this morning. They were a little bit lower than last month. That's another, I'll say, bullish indicator. So far, we're seeing a couple of indications that the jobs report this month is going to be a little bit better than last month's, which, by the way, last month's was horrible, I would add. So a little bit better than horrible seems to be based on the JOLTS numbers that we saw, based on ADP yesterday, and now challenger job cuts being a little bit lower. We also got initial and continuing unemployment claims this morning. Initial was up a little bit by 6,000. Continuing was down a little bit by 8,000. Not a lot of we can read in those tea leaves this morning. But right now, my gut tells me we're probably looking at, I would say, a subpar jobs report, but not as bad as last month. We'll have that information tomorrow morning. And Warren Buffett is selling even more Bank of America stock. He sold about another $380 million worth of his Bank of America shares. It looks like the pace of selling may be slowing for Warren Buffett, but he is still selling. And oh, by the way, that's the same bank that this time yesterday, a lot of people were logging into their bank accounts in Bank of America and seeing a $0 balance. What? Yeah, there was either a hack or some kind of a glitch, some kind of technical difficulty at Bank of America yesterday. Customers all over the country were taking to Twitter and posting screenshots of their accounts showing $0. And by the way, I put out an informal poll on Twitter. Hey, all you guys who are seeing $0 in your account balance, are your debt accounts showing the same zero balance? And everybody replied no. So maybe this was just like a magic fix for the balance sheet, right? All our liabilities magically go away. Oh, sorry, inconvenience for you, but you still owe us money for the credit cards and the mortgages. Anyways, it looks like that's resolved. It was just a technical issue. No big bank problem to worry about there. Why don't we shrink my big melon of a head and let's see what is going on in the market this morning, shall we? And guys, don't forget that like button and that subscribe button because we do this every morning. So have your coffee with the melon heads as we go through markets. The S&P 500 is down 16 points, 0.29% lower ahead of the open. We've got the Dow is also lower this morning, down about 158 points or 0.38% lower. And the NASDAQ is down 85 points ahead of the opening bell or 0.43% lower. So we've got stocks are down pretty much across the board, albeit only modestly. We've got the dollar is higher again. We've seen a pretty rapidly strengthening dollar this week. Now, again, this is after rapidly depreciating for the several months in a row, but up another 24 basis points here at 101.91. That is about 0.25% higher for the Dixie this morning. Now, I'm going to go a little bit out of order here. Looking at USD, JPY, we have the Japanese yen continues to weaken. Yesterday, we had a big green candle in the Japanese yen here. Let me draw that there. Right around there. That was the comments by Shiba Shigeru or Shigeru Shiba. I don't know which one is the family name and which one is his individual name. But their new prime minister came out. He was talking like a dove yesterday, even though he's got a reputation for a hawk. And the yen weakened rather substantially on that news. Remember, this chart moving higher is the yen getting weaker versus the dollar. That's continuing this morning at 146.57. So that would be contributing to some of this dollar strength that we're seeing. And, ever since last Friday, when Ishiba was announced as the winner of the Liberal Democratic Party, we had a rapid strengthening of the yen shown here on this big red candle. And it's done nothing but head higher ever since then. The yen has weakened because Shigeru Ishiba has been trying very hard to shake his reputation as a monetary hawk. And, well, Forex markets are listening to him. Also going on this morning, we have got bond yields are higher once again on the long end of the curve. The 30-year Treasury is at 4.150. That's up almost 2 basis points this morning. The 10-year is up 3 basis points to 3.819. And the 2-year at 3.679, up 4 basis points. Once again, guys, the Fed does not control the long end of the yield curve. They don't control those 10, 20s, and 30s, at least not directly. They can influence that with their balance sheet buying and selling, but they only really control those ultra short-term rates. And, well, ever since the Fed lowered interest rates on the long end of the curve have actually risen almost every day because I guess they got a little too ahead of themselves expecting those rate cuts and expecting all the big, wonderful things that were going to happen in the soft landing. And then, of course, reality sets in, and a 50 basis point rate cut really didn't make that big a difference for anybody. The 1 month, meanwhile, 4.809. That's essentially unchanged on the day. Also, something I want to talk about, guys, we mentioned SOFR, or the Secured Overnight Financing Rate, yesterday. We had mentioned that there was 2 consecutive days of rapid increases in the SOFR rate, and that was a little worrisome, that there was rumors of somebody blowing up in China, and that the SOFR rate was supportive of that, and that I expected to see the SOFR rate coming down yesterday, and it actually went up again. Well, we've got an update. The SOFR rate is actually 4.92% this morning. So it did finally go back down last night, and it went down pretty substantially. It looks like about 13 basis points that it dropped. So whatever was going on in the overnight funding markets, it seems to have ebbed, at least for now, back to 4.92% there. Also, let's look at the commodities board. We've got a little bit of red in the metal space here. Spot gold at $26.46. That's down about $12 this morning, or 0.45%, although still in the mid 2600s. Spot silver's at $31.57. That's down about a quarter, or 0.81% this morning. We've got copper futures are down 2.2%. Platinum futures are down 2%. Palladium futures are down 3%. But crude oil is higher once again, $72.03 for November WTI futures. That's up almost $2, or 2.8%. What's going on in oil? Well, CNBC this morning is saying pretty much the same thing I was saying yesterday morning. Oil market faces a rude awakening if Iran's energy infrastructure is targeted, analysts say. We still have not heard back from the Israelis in their response to that missile strike yesterday. There's still fighting going on in southern Lebanon, but the Israelis have not hit back at the Iranians yet, and what form that retaliation takes could be huge in the oil markets. Oil markets are being too complacent given the risk of major supply disruptions in the Middle East, analysts told CNBC on Thursday, with one warning that crude futures could rally to more than $200 a barrel. It comes amid speculation that Israel could be planning to launch a retaliatory attack on Iran, targeting its oil infrastructure, a prospect which would likely deliver a rude awakening to bearish energy market participants. If you really took out the oil installations in Iran, forced down the exports by 2 million barrels, then the next question in the market is what will happen now in the Strait of Hormuz? That, of course, would add a significant risk premium to oil. It's according to somebody named Shieldrop over at the Swedish bank SEB. Asked the extent to which oil prices could spike in such a scenario, Shieldrop replied, if you take out installations in Iran, easily you go to $200 plus. Situated between Iran and Oman, the Strait of Hormuz is a narrow but strategically important waterway that links crude producers in the Middle East with key markets across the world. Now, look, I don't think oil instantly goes to $200 if the Israelis strike the Iranian oil facilities. It would cause oil prices to rise, but that $200 number, that is assuming a shutdown in the Strait of Hormuz. And that would be the most likely response by the Iranians if the Israelis do hit their oil infrastructure. The Iranians would most likely shut down the Strait of Hormuz. And it's also important that they have been practicing this for over a year now with what they've been doing via the Houthis in the Red Sea. And they have been largely successful in shutting down a lot of the navigation in the Red Sea. Very few ships are actually going through there. A lot of them have been hit. Most ships are taking the long way around the Horn of Africa. So it's important to watch these next few days. Geopolitically speaking, I don't mean to be adding to the war drums and beating everything, guys, but this is a very real risk to oil markets. Now, the flip side to that coin is that right now there's a big supply-demand imbalance, which is why oil prices are as low as they are, and that's going to get worse. We've got things in China are very bad, despite what the Chinese stock market has done over the last week or so. We've got about 1 million barrels a day of oil production are coming back online in Libya. There was something going out on the Bloomberg terminal this morning saying Libya's largest oil field is starting production up again today. So you do have a lot of supply demand dynamics. You got the Saudis threatening to flood the market with supply to try to take back market share from domestic producers. But at the same time, geopolitical risk is out there. Look, oil prices could make a big move one way or another right now. So just be careful with your leverage here, guys. If the Saudis flood the market, prices crash. If the Israelis target the Iranian oil facilities, prices rally. It's hard to gauge right now. So just be careful if you're going out on leverage. Also, looking over at Bitcoin right now, it's down about $500 this morning on Coinbase, trading at $60,108. It's been a rough 4 or 5 days for Bitcoin here, although still above that $60,000 level. And now we have to talk about this, guys. People are panic buying toilet paper because of the port strike. There is no need for that. This one is in the Communist News Network this morning, CNN Business here. And there's our guy with all of his gold jewelry. I don't know if this guy is being viewed as hero or villain right now. I've seen the portrayals of this guy in the press have been not very positive, and I'm inclined to agree with it, because if you're talking about other people being too rich and putting profits over people and saying, oh, I'm going to shut the whole freaking country down and bring back inflation, maybe you want to take off some of the gold jewelry before you do that. We talked about that earlier this week. But now this guy has people scrambling to buy toilet paper. Toilet paper shortages in stores across America are giving folks nightmarish reminders of the pandemic era, but the lack of toilet paper isn't a direct result of a major port strike on Tuesday. It's because of panic buying. Reports of shortages filled social media Tuesday. Empty shelves where toilet paper and, to a lesser extent, paper towels were supposed to be. They cleaned out the toilet paper at my local Walmart in Virginia. Toilet paper hoarding 2.0, wrote one person on X, along with photos of empty shelves. Shelves at Costco and Target are running low or out of TP in Monmouth County, New Jersey, posted another user on X. Seeing people buying TP and water, too, is a reaction to the port strike. Costco employees told me they were sold out of TP this AM. But the strike at ports from Maine to Texas will have absolutely zero impact on the supply of these products. The overwhelming majority, more than 90% by some estimates, of U.S. toilet paper consumption comes from domestic factories. Most of the rest comes from Canada and Mexico, which means it will likely arrive by rail or truck, not ship. In other words, the port strike will have no impact on the supply of toilet paper, because moving toilet paper by boats doesn't make any sense, just like panic buying toilet paper now doesn't make any sense. The American Forest and Paper Association, the trade group representing paper manufacturers, expressed concerns about the impact of the port strike could have on its members, but it cited the risk to its exports to foreign markets being cut off by the strike, not imports. So if anything, the strike could result in a glut of toilet paper, not a shortage. But that didn't stop the mob psychology of people rushing to stock up out of fear of a shortage, fed by bad memories of shortages and limitations on purchases that occurred in 2020 during the pandemic. There will likely be some shortages caused by the port strike, but mostly for perishable goods for which the U.S. market depends on imports. Item one is bananas. All right, so if you're going to go bananas for bananas. Do not panic buy toilet paper, guys. And look at some of this stupid stuff. I mean, this is on Twitter yesterday. Look at this guy with his flatbed cart just loaded up with TP and paper towels. Oh, there. Now he's got his wife pushing the cart. That's great. Gotta love it. Oh, this guy's got some too. Yeah, he's squeezing as much as he can. And the gal behind her, she's piling up on it. look, guys, there is no need for this stuff. It just doesn't work that way. The port strike will not affect it. All right, let's talk a little bit about my favorite subject, the shinies here. Why the debasement trade is lifting Bitcoin and gold, and it may continue, according to JP Gold has appreciated more than what would have been expected by changes in the inflation-adjusted 10-year yield, analysts said. The debasement trade, this is according to JP this morning, the alternative to the U.S. dollar haven't responded well to the latest Iran-Israel fighting, with gold down and roughly flat and Bitcoin down 3% since the point where oil prices started spiking higher. But gold has recently been recording record highs. Strategists at JP led by, oh man, do I have to try to pronounce this? Nikolaos Panagurtsoulou. How did I do? Nick P. Nick P says that gold has gone well beyond moves implied by the dollar and real bond yield shifts. Instead, it has been driven by what's called the debasement trade. Now, the debasement trade is a term that reflects a combination of gold demand factors, which in our client conversations range from structurally higher geopolitical uncertainty since 2022 to persistent high uncertainty about longer-term inflation backdrop to concerns about debt debasement due to persistently high government deficits across major economies, to waning confidence in fiat currencies in certain emerging markets, and to broader diversification away from the dollar, the strategist said. These are all views, it should be said, that have been expressed for years, but gold around $2,700 an ounce and Bitcoin at $60,000 give them new currency, so to speak. So, look, they're citing a lot of reasons here. Geopolitical, okay, that might be a factor, right? Gold has done well since the invasion of Ukraine. But really, guys, this is about the government. This is about government spending. This is about central banks being dovish and printing money to accommodate that government spending. This is about financial repression. And this article in Barron's this morning is saying the same thing. Gold rally is sending a warning. It relates to the U.S. debt. This is pretty much on the same morning. This is a few days older here, but history doesn't repeat, but it often rhymes, and the off-cited Mark Twain goes. But there are classic couplets. What are they? What's a couplet? Somebody let me know in the comments what a couplet is, or is that French? Is that couplets? I don't know what it is. As well as what passes for rhymes in popular song lyrics. The latter comparison seems more apt when past market economic cycles are seen as precedents for the present. And they're talking about the 1990s here as an analogy for the current market. In the 1990s, you had stocks were rallying. You had central banks were trying to contain inflation with rate hikes. And they engineered the soft landing in the 90s. That's debatable because it just led to the dot-com bubble. But we didn't have the massive deficits that we have now. And once again, this article is zeroing in on governments as the culprit for the rise in gold prices. As noted, the most expedient way for a government to deal with debt and defense spending pressures is inflation. Maintaining nominal current dollar GDP, essentially the economy's top line, generates revenue for taxes to pay debt service expenses. Suppressing real interest rates further helps make the debt less burdensome. The combination is referred to as financial repression. If you think I'm kidding, guys, the IMF and the World Bank and all those muckety-muck organizations have written about financial repression as a solution to government debts for years. In other words, we're going to stick the average person with the bill via inflation, and as long as our education system continues to suck at teaching finance, the people won't even realize it's being done to them, and then we can let the politicians blame suddenly greedy corporations for why we had inflation instead of their own stupid decision-making. Financial repression, which is essentially a polite term for screwing bond investors and screwing savers who get stuck with negative real returns. That may be what gold is sussing out in this highly contentious election campaign. And I would add, guys, this highly contentious election campaign is not even bothering pretending to talk about spending cuts, pretending to talk about the debts and the deficits. The deficit and debt rank lower than cats and dogs in the political discourse. And I feel like I've been shouting at a brick wall after every debate, the presidential debates and the VP debate. No questions about cutting government spending. No questions about getting the debt under control. No questions about fiscal responsibility. The Republicans just rolled over in Congress once again with another short-term funding bill with no spending cuts whatsoever. We don't even talk about it anymore. at least for the last few years, while we've been doing nothing about the debt spending, at least we've been talking about pretending to care. We're not even doing that farce anymore. And is it any surprise that people are buying gold with that going on? And apparently it's not just gold. Look at Costco selling platinum bars. This one just hit yesterday, 1 ounce platinum bar from Pump Swiss. The lady Fortuna Verskin, I don't know what you would call that one, but Costco is now selling platinum. I remember it was such a huge deal when Costco started selling gold and thinking, wow, I mean, if there's enough of a retail demand that Costco is going to be selling bullion, what does that tell you about the sentiment shift going on among retailers and among consumers? Well, it tells you people are finally weary to what the government has been doing to them and the central banks have been doing to them. The average person probably still doesn't understand the mechanics of how that's happening, but they are seeing the price of everything else going up, and they finally realize it's happening to them. Now you've got platinum at Costco. Who had that on their 2020s bingo? Now, look, guys, platinum, I know we got some big platinum fans in this group. I'm actually not that excited about platinum. I own a little bit of platinum in the form of an ETF. It's a very small position. There's geopolitical risk in platinum because the BRICS countries control almost all of it. Between Russia and South Africa, it's like 98% of the global platinum supply. So if there ever is any kind of a widespread BRICS trade embargo or trade war with the U.S., platinum prices would probably spike dramatically off of that. But that being said, the largest source of demand for platinum is still automotive, still in catalytic converters. And look, as much as I knock electric vehicles on this channel, the trend of EVs is not going away. More vehicles will be converting over to EVs, certainly not at the ridiculous pace that the media portrays it as or as the politicians are trying to force. But the fact is EVs will continue displacing internal combustion engines, and that means lower demand for platinum over time. So you got to balance the shrinking demand situation with the geopolitical risks, a lot like what's going on in oil right now. That being said, a little bit of platinum is not a terrible idea. I own a little bit of platinum, but I much prefer gold and silver personally. Also going on this morning, OpenAI closes funding at $157 billion valuation as Microsoft, NVIDIA, and SoftBank join the round. Well, look, OpenAI, they're not going to go bankrupt yet. They just raised about $6.6 billion, so their cash-burning operation has time now. OpenAI, let's talk a little bit about this company and its financial performance, because OpenAI is very big on making grand promises and talking about the next industrial revolution, and every dog, cat, and hamster in the world is going to be using a large language model to displace call centers or whatever's going on. OpenAI generated $300 million in revenue last month, up 1,700% since the beginning of the year. All right, so the company's taking in money. Look, the company expects to bring in $11.6 billion next year, up from $3.7 billion in 2024. That is an impressive rate of growth there. But the problem is all that revenue is extremely costly, as OpenAI has to ramp up purchases of NVIDIA GPUs to train and run its large language models. The company expects to lose about $5 billion this year. The person said Microsoft has invested billions of dollars in OpenAI as a key partner as the software giant bolsters its Azure cloud business. The point is, guys, OpenAI still loses money, and they lose it by the billions, and that profitability situation is not improving. So this $6.6 billion of cash that they just raised at $157 billion valuation, they just bought themselves a one-year lifeline. That's it. They're still going to be dead in a year if they don't drastically increase prices or somehow come out with a more marketable product. But the fact is, most people who use ChatGPT or OpenAI's products don't pay for it because it's free. And if you do use it, let me know. If all of a sudden ChatGPT were to be totally paywalled, would you pay to use it? I'm guessing most people would say no. So this is a cash-burning operation right now. And it's been my argument the whole time. AI doesn't make money. The only people making money on AI are the hardware people, the people who are selling this promise. The people who are making this promise are losing money hand over fist, but they're still able to go into the equity market. They're still able to go into the debt market and raise cash. So the bubble continues for now. Let's do a little bit of quick labor data, guys. We got challenger job cuts in the United States came in at 72,821 for the month of September. That is down slightly from 75,891 in August. Looks like technology saw most of the job cuts, followed by healthcare and entertainment and leisure. Here's a chart of your challenger job cuts, down slightly, but still elevated versus where we were a year ago. So that tells me we're probably looking at another bad jobs report. Maybe not as bad as last month, though, because we are down a little bit. Also, we got initial jobless claims this morning. They increased to 225,000 for the week ending September 28th. That's up from 219,000 the prior week. There's those recent data points there. So initial jobless claims, we have set kind of a new level over these last couple of months. We've seen higher numbers, although they are down off the highs that we saw in late July. And continuing jobless claims in the U.S. decreased to 1,826,000 for the week ending September 21st. That's down from 1,834,000 in the prior week. So we've got continuing claims have trended down a little bit. If you take all of this data combined, it suggests, again, a weak jobs report, but maybe slightly better than last month. So that would probably be a little bit bullish because right now the market is really afraid of the job situation continuing to get worse. It looks like it probably went sideways over the last month. Now, one data point that we got, this came out recently. This was in Twitter, by the way. Median year-over-year change in annual pay for job changers versus job stayers. We talked about this yesterday. One of the reasons why we're seeing so much fewer in the job quits in the JOLTS report. Fewer people are voluntarily leaving the job because they're not sure they can get a new job, and they're also not sure they're going to get a big raise if they change companies. And you can see that in this chart. This shows the change year over year in salary for people who change jobs in purple versus people who stayed at the same job in blue. Now, the job changers are still making more money than the job stayers. But look, during the Great Resignation of 2022, you see how the huge delta was there. Job changers were being rewarded handsomely for jumping around from company to company. But that gain has virtually evaporated now, with job changers are seeing 6% and change pay increases versus 4% and change for stayers. That's closer than they have been in years. So once again, this chart is showing some weakness in the labor market. And you notice here, this took a pretty substantial decline recently. The purple line dropped pretty sharply. So that one is suggesting a weak jobs report. We won't know until tomorrow, guys, but right now it looks like the jobs market, it's staying weak, but it's about where it was last month. So let me know in the comments what you think the jobs report is going to look like tomorrow. Will unemployment rise or will it stay the same? We won't know till tomorrow morning. And I want to say thank you so much to Nashville Pasta Man, who says 400,000 yen will get you 1 ounce of gold. Say that again. Okay, you told me. 400,000 yen will get you 1 ounce of gold. Look, guys, it wasn't long ago where $20 would get you 1 ounce of gold. It wasn't long ago when $30 would get you 1 ounce of gold. And it wasn't that long ago when $300 would get you an ounce of gold. Now we're sitting here at $2,650 will get you 1 ounce of gold. And 400,000 yen. Look, guys, the course that we're on, the path that we're on. All right, people are going to tell me I'm crazy for this, but we are on a path to $400,000, not yen, dollar gold. That is the path we're on. It may take a long time to get there, but look at what the situation is, how we're talking about financial repression is now like built into monetary and fiscal policy, where the very goal of global elites is to continue robbing the average person via low interest rates and inflation. That is like the mainstream ideology of our economics profession. These idiots on CNBC and Bloomberg, all the people teaching finance in college, they're all Keynesians. They're all modern monetary theorists. They are all pushing financial repression as policy. And then they're like, the economy is better than it's ever been. What's wrong with you poor people? Why don't you understand that? Because the stock market is up at the expense of the average person. The banks are doing so well at the expense of the average person. All these people who get together in Jackson Hole, Wyoming for their annual monetary policy summit while they have dinners that cost more people than the average person in the world makes in a month. And they say, oh, how do we convince the poor people that they have it so well? It's because of financial repression. And yes, Pasta Man, you can replace that yen with a dollar sign sooner or later. If we do not change course, and we're not even talking about changing course, price of gold will be $400,000 an ounce. That's a long way off. It's a long way off, but we are on track to that. All right. I would say we'll see 400,000 an ounce before we see 300 an ounce again. That's for sure. Thank you very much, Nashville Pasta Man. Appreciate the super chat and the support of the channel, sir. And thank you to Jeanette for being a melonhead for 6 months, who says, will we ever know what caused SOFR to do that? Maybe. It's the best I can give you is a maybe here, Jeanette. If we see some Chinese bank or maybe some U.S. or Japanese bank with a large exposure to short positions in China go belly up in the next few weeks, then we'll know what it was. If we don't see that, if that doesn't happen, then we can attribute that jump in SOFR to the end of quarter, end of fiscal year surge that we usually see in reverse repo and the large number of cash transactions caused by institutions doing window dressing at the end of the year, which is common. It looked a little different, though. I was very surprised that SOFR stayed high yesterday, and that's what really had me scratching my head, although it came back down today. So right now I'm leaning towards end of year window dressing as the cause, but I wouldn't rule out somebody blowing up because of a short position in China. Thank you very much, Jeanette. Appreciate the support of the channel as a Melonhead member. And thank you to the Chronicles of the Red Drift Machine. He says, invest in a bidet to protect from TP price surges. Well, now we're thinking outside the box, Chronicles of Red Drift. That's right, guys. Why panic buy toilet paper when you can go panic buy bidets? And then, of course, we can worry about water shortages. Maybe the next thing everybody will panic about. And, oh, my God, now my bidet doesn't work. Quick, pivot back to panic buying toilet paper. But I like the way you think, Chronicles of Red Drift. And again, we are now thinking beyond the confines of the parallelogram that typically bounds mainstream thinking, or think outside the box. I hate that phrase, think outside the box. I really can't stand it. I use it sarcastically, if ever. Thank you very much, Chronicles, for the super chat and the support of the channel. And thank you to all you Melonheads for having your coffee with us this morning. I appreciate you guys very much. Thank you so much to my Patreon supporters and magnanimous Melonheads on YouTube for everything you guys do for the channel. Linked down below, should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.